So I've just bought my first buy-to-let investment property, and today I wanted to share with you guys everything from setting up the company through to financing, figures, and the strategy behind the investment. So to do that, we need to go back to about 3.5 months ago. Okay, so I've just viewed this one-bedroom flat, which is literally a stone's throw away from where I live. It's up at £120,000 as of right now. But having looked round it, it doesn't need a huge amount of work doing to it. Probably just a lick of paint throughout and a few more cosmetic bits, which is a little bit more what I was after, especially for like my first buy-to-let being a little bit more of just a turnkey. I can kind of go in, do a little bit of work and get it straight on the rental market. Now I've looked on Rightmove just for some comparables, and if I'm honest, there aren't many other one-bed flats available for sale in the area, nor are there many up for rent either. However, from the ones I have seen, it does look like it will probably rent out for a decent amount of money, and it should certainly turn a profit. So I'm going to go home now. I'm going to run all of the numbers properly, but then I'm kind of thinking, just as I'm talking here, is I'm probably going to put an offer in about 10% below asking price. The seller's motivated as well because they've got a property that they want to go to, which they lost out on previously. So I know that they definitely want to secure their onward purchase because they've already lost out on it once already. So I think there's probably some room for negotiation, and there's a little bit of work that needs doing to it as well. So I'll use a couple of those things in my negotiation tactics, and I'll see where we end up. Now, the £108,000 offer actually got rejected, but a few text messages back and forth with the estate agent, and we actually landed and agreed on a figure of £112,000. That's a 7% discount from asking price, and already a little bit of equity built up into this very first buy-to-let property investment. And that turned out to be a good thing because there were some additional, perhaps even a little bit unexpected expenses that I didn't exactly anticipate. So at this point, a little bit of time had passed, the solicitors were working through their paperwork, and it came the time where I had to get a mortgage offer in place. And well, let me just say this, it certainly isn't as straightforward as what I thought it was going to be. And to be fair, I probably didn't help myself in the way in which I wanted to finance the deal. Because here's how I wanted it all set up. I have a limited company set up right now for this YouTube channel and all of the income that it generates. And the plan was and is to use the retained earnings within this business to borrow the money to my other property investment business in order to purchase the property. It's a way to move the money around without getting absolutely slapped by the tax man by doing what I think is called something called an intercompany loan. But when you do that, it doesn't half throw a spanner in the works. First, the number of lenders that you have available to you massively reduces because it's seen as a little bit more of, I guess, a higher risk transaction. The second thing that I also didn't realize was that any shareholding across the two companies also needed to be mirrored, which was another thing that I had to change because my partner is a very small shareholder within the YouTube business. However, then came the third issue, which was because my partner wasn't a person of significant control, i.e. she doesn't own over 25% of my YouTube business. When I made that change over for my other property business, it didn't appear on Company's House, and therefore I couldn't evidence it to the underwriter that she actually owned a portion of both businesses. Or at least as I initially thought, and many conversations back and forth between myself and the broker and the lender took place, where we actually came to the solution that if I just updated my confirmation statement, they would be happy to accept that as evidence. But that wasn't the only issue that I had with the underwriters. There was one other thing that almost made this whole deal fall apart. What lender options do I have then? Is there kind of any lenders that I'll be able to use from the solicitors that I've instructed or not? Yep, that's me on the phone to my mortgage broker. Perhaps naively, I wasn't aware that the mortgage lender would only interact with the chosen panel of solicitors. And for the mortgage offer I'd originally chosen, my solicitors weren't one of them. I had emails flying back and forth between me, the broker, and the solicitor to try and come to some kind of conclusion as to what lender we could actually use with my solicitors that I've chosen. But one thing I've certainly learned from this whole process is that when life throws challenges at you, then it's certainly important to have a bit of patience and persistence and resilience in order to find solutions to those problems. And as a result, every challenge that I've gone through during this process, I've been able to turn into a learning opportunity, and that experience will be massively invaluable because I know that the same mistakes or problems or challenges certainly won't come up in the future because of the knowledge that I've acquired. So the process of getting a mortgage offer on the table, which you'd think would probably take a week or so, actually took me closer to 8 weeks. But from being on the cusp of pulling the plug on the whole thing, we found a lender called Precise Mortgages, and here's exactly how I set up the deal. It's a 2-year interest-only fixed-rate mortgage for a 25-year duration. The mortgage fees and the setup costs were an eye-watering £2,535, which, just for context, as I've been told, is as a result of the high interest rates that we have at the moment. And what lenders are actually doing is they're actually hiking their product fees in order to be more competitive from an interest rate side of things. And if you compare those fees to just a normal residential mortgage, they're just absolutely astronomical. And some of them are even higher than what I paid. But the rates are still pretty high in fairness. I've actually got an interest rate of 5.59% on my mortgage, which works out to be £391 per month. And I'll go on to share a little bit more about what the profit from this property should generate a little bit later on in the video. But for now, with the mortgage offer in place and contracts signed and exchanged, it's now time to fast forward to completion day. Right guys, so I've got the keys, so we'll head over to the property now. I'll show you around, I'll share the renovations with you. So let's head over there now. So here is the property. It's in pretty good condition already. The kitchen is relatively new. The living room is okay. I don't really like the wall colours, but it's okay. I annoyingly uncovered this missing piece of carpet, so we'll have to recarpet the living room. And the bedroom also is fine as well. I did go on to realise that the electric heaters were also missing off the wall, so I'll also have to replace those too. But all in all, it could just do with an overall lick of paint and a bit of a tidy up. The bathroom is definitely the worst room and certainly needs a clean and maybe a little bit of grout and silicone, but I'll make sure it's all clean and tidy before I rent it out. So generally speaking, here are the list of jobs I've got to do. So it was a couple of trips to B&Q Screwfix and Tool Station in order to get the renovation underway. Morning guys, so it's day one of renovations today. I've got a big list of jobs I need to get through, but nothing that can't be done with a little bit of hard work and elbow grease. And also, I suppose that's probably one of the most important things, especially for me first getting started out in property, is that by doing all of the work myself, not that it needs a huge amount of work, a lot of it's just light renovation, but it does mean that I can keep the costs down and therefore essentially keep more profit in my back pocket as I start off on this property journey. So I think with that said, let's go into the property now and let's get started. So I worked pretty solid over the next few days. Unfortunately, I didn't uncover anything too untoward. A stuck hot water tap covered in limescale and some dodgy carpet was pretty much the worst of it. Instead, it was largely just a case of filling holes, sanding down the walls, and a lick of paint throughout, along with all of the other odd jobs to make the place look nice for the new tenant. But it was all worth it in the end because I got the place exactly where I wanted it to be, from dark, dusty and worn out to looking clean, freshly painted, which absolutely brightened it up massively and ready for someone to make it a great home. Which left me two final important things to do, which was to get the estate agents around to photograph it and get this thing up on the rental market. So today, as at the point of recording this video, I've actually met up with the estate agents. They came and photographed the property in order to list it on the market, and it is now currently live, with viewings already booked for this weekend. But one thing that I couldn't quite believe is when we got down to the discussion of how much I could rent it out for. If I'm honest, I was probably only expecting about £750 per month, but they actually came in today and said that they wanted to put it up on the market for £825 per calendar month instead. Now, I don't want to get ahead of myself because I don't have a tenant agreed as of right now. However, if I'm able to achieve an £825 a month rental, then that will really stretch the profit margins on this business in a positive sense. So in light of that, this is probably the bit that you've all been waiting for. Let me now share the breakdown of the figures in terms of how much money it actually cost me to buy this property, along with the profit and return on investment that it should hopefully generate me over a period of time. So first, let's talk about investment costs. And as I've already said, the property purchase price that we agreed was £112,000. But actually on Zoopla, the average price estimate for this property is £120,000. So assuming that I would be able to resell it tomorrow for £120,000, now I've done a little bit of work to it, I've also, more conservatively, I guess you could say, increased the value of that property by 2% per year for the next 5 years, which takes us from a value of £120,000 today up to a value of near on £130,000 by year 5. Based on my purchase price, that would be an £18,000 profit or capital gain, if you like, over the course of that 5-year period, which is the equivalent to about a £3,600 gain per year, which of course I'm pretty happy with, and I have no intentions of selling this property within the space of 5 years. And in perhaps 20 years from now, the amount of profit and capital gains that I will have made will be far more. So in terms of the breakdown of those investment costs, well, the deposit was 25%, which was £28,000. The mortgage broker and the fees, which I've already said was £2,535. I paid £1,629 for solicitors, which I think is quite reasonable. I also had to pay £360 for independent legal advice because I had to do a personal guarantee on the mortgage that I took out. Then we've got a estate agent's marketing fee, and to list the property, it's going to cost me £300. Refurb costs actually came in at a fairly reasonable £466.03. And in that included new carpet and fitting. It also included 2 new electric heaters. And it also included new light bulbs for the bathroom because they weren't bathroom safe whatsoever. And just a general painting and decorating type stuff in order to bring the property up to where it needed to be. Stamp duty at 3% was £3,360. So for a total investment cost for this property was £36,650. Now, in terms of the profit in which hopefully this property will generate, well, if we are able to achieve a rent of £825 per year, I've also increased that rental figure every year or so, I think, by about 3%. Have been told that actually rental rates go up between 8 and 10% per year, so I'm just erring on the side of caution at 3%, but potentially I could achieve far higher in the future. In terms of the mortgage costs, well, we've got £391 mortgage, as I said. The estate agent management fees, because if I'm honest, I just want to take the complete passive approach to this property, is 8% plus VAT, so just shy of 10% of the rental amount. Maintenance, I allocated, I think, a 5% maintenance budget. If anything were to go wrong, if there was a tap leaking or anything like that, I've allocated a bit of a maintenance budget of 5% of the rental cost. Insurance I've took out for £18.66 per month, which actually gives me a monthly positive cash flow of £294.59, which on an annual basis is £3,535, and profit after tax at 19% is £2,863.41. Now, what's also quite important to note here is that, generally speaking, these fees or costs, if you like, should generally stay the same. They're probably not going to increase too drastically, whereas the rental amount that I could potentially obtain over time will proportionately be bigger, and therefore actually the profit that I'll generate from this investment property could potentially grow throughout the course of the next few years too. So what does that mean in terms of return on investment and rental yield? Well, actually from a return on investment standpoint, we're looking at a first year post-tax return on investment of 7.8%. And in terms of the rental yield, well, we're actually looking closer to 9%. So look, I'm absolutely over the moon with these types of returns from pretty much a boring vanilla turnkey buy-to-let, which has pretty much taken me less than 7 days from picking up the keys to turning it around and getting it back on the rental market. So they're the figures and the story of the past 3 or 4 months or so, but above everything else, I wanted to say a massive personal thank you to every single one of you guys watching these videos, because without you guys watching these videos, I certainly wouldn't be in the position that I am today. A few years ago, I had a massive goal to actually get my first investment property, and in the past week, you guys have certainly helped me make it a reality, and for that, I simply can't thank you enough. So in light of that, I will try and do as much as I can, as I kind of do with my other stock investments, and I will share this property journey with you guys as transparently as I possibly can on this channel. So in light of that, be sure to subscribe for future updates as well. Drop a like on this video, guys, if you did enjoy it. And with that said, on to the next property.